Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500. Looks like it's the Delta DTS gaining in a staggering, the 10K version, a staggering 44% just the other day. 21st day, today's 25th day of May, Memorial Day weekend, and this is Friday. And so this was a few days ago, 45% gain. But we're looking at a chart of the market quickly. Going to the E-mini S&P 500 futures contract. One of the best and most liquid contracts to trade on the planet. Looking at the last print of 13/20/50. Kind of a quiet day. It is a summer Friday. Technically not summer. Arguably summer has begun on an unofficial basis, Memorial Day weekend. And kind of a quiet day. If you look at our intraday dynamics, you can see kind of what I'm talking about. We've had an open below the high of the prior day, Thursday, and really just boom, 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 triple head right there at the high and close of the prior day session. You have that matched against the intraday trend. Where you have a double bottom. So it's really kind of indicative of the daily chart, which we're going to look at, indicative of the market that is really more than likely going to be choppy over the next 4 to 6 weeks, and we actually look to participate quite nicely in such a market environment where we can trade both the long and the short side. Not only do we make money in directional moves and daily intraday, but certainly during range-bound markets as well, we profit rather nicely, and we'll look at that in a second. But as you can see, we're not really going to put out a free informational day trade on this Friday, given that we do have this monstrous amount of resistance, both on an intraday basis being the high of the prior day, and on a daily basis being the our key short-term measure of trend following support resistance, which actually is right at 1320 to 1323 or so. But as you can see, we are fully bullish right now, and looking at our intraday dynamics, green, 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 and again we're having a slight divergence here. So really, if we were to put out a free informational day trade on a 5-star scale, we would definitely say go long here at 1321. Expect to see a nice move into the close. Take your profits probably at about 4 and 6 points respectively, and go ahead and stop it. Certainly around 16 is where you want to stop out that long exposure. If we get down to about 20 and 19 again, you definitely want to add to that exposure, and so that'll be kind of an interesting trade. We'll put that kind of a 2 out of 5 stars, given that we do have certainly a choppy market environment. So that's a quick look at the intraday for this Friday. Quick look at the intraday, and we're going to go ahead and minimize that, and now we're looking at the chart of the daily. And again, for our intents and purposes, although our official market timing is neutral, and we went to neutral, we should have some arrows here, but we went to neutral around this area, and but unofficially we informed our clients that we definitely expected a nice quick scalp from around 1350 to 1300. And we'll look at that in a second. But as you can see, generally for our intents and purposes, we, from a trend following perspective, we look at this blue line, and certainly when you get across, that's even indicative of, can be kind of a buy signal. If the markets come down, we're not going to take it as that. We've been looking for an add to buy signal since we went long officially. Not sure why this chart has no... Okay. Scroll out a little bit. So there was our unofficial buy signal. We went officially bullish at 12:30, and we closed at around, we'll say 1400 or so, 150 to 170 points, and we went to neutral. And all along we were looking for an add to buy opportunity. We didn't really get it. It was too shallow of a pullback here. We definitely expected that we were going to need much more of a pullback, and we've actually gotten that, but we're going to hold off. We're not, any other time we definitely add to our long exposure. This is a key 200-day simple moving average SMA. Here's an exponential moving average right here. Kind of this is the one that we use to gauge actually the exponential. It's a little bit faster, but either can be of significance, as you can see right here. And so 1270 to 1290 is monstrous support in the market. But again, we're going to hold neutral for now. We're going to wait and see. Sell in May, go away. Be in the summer months. Again, we really anticipate more of a trader's market than anything. So we anticipate some great profits on our system side, but on our market timing, we're going to still hold neutral for the market. But you do see a matched weighting of 50% bearish here and 50% bullish, so that's neutrality, hence the neutral judgment. In terms of momentum, we're actually getting a little bit of a hook here, but could just be another selling opportunity. We're short-term and intermediate-term bearish here as well. From a directional movement perspective, we are intermediate term neutral to bearish, getting a bit of a rollover there, and short term bearish as well from a directional movement perspective. So that's kind of where the market is. We definitely expect the potential for a move quickly up to 1350, but definitely would be selling any kind of 1350 on a trading range basis, on an unofficial trading basis, selling 1350, looking for a move to go ahead and test down to around 1250 to 1270. And if we get a flush out, get a nice flush out matched with dynamics and all the key measures that we look, indications that we look at, we may actually move to back to official bullish on the market. But right now, we're going to go ahead and look over at the sentiment picture. This is our free model. Again, no trades recently. Doesn't trade that often. Looking at the TF 766.40. Wow, pretty impressive bottom there, bottom there, bottom there, and we've actually broken that. So that's particularly bearish, particularly given that we have this head and shoulders, beautiful head and shoulders. Man, does the TF, I wish that had much more volume, about 10 times the volume that it does, liquidity, because this is simply a beautiful setup. This shoulder and the head, and then breaking the neckline, and then now breaking this. It's just absolutely beautiful. So definitely, again, just like selling 1350 in the ES, selling 780, 775, we'll call it, in the TF for a rollover move. Heck, we might even get an outside shot at 800, but definitely the market is certainly in a weak pattern and a weak formation. We did, however, have a relatively extreme level of fear on this breakdown. So that's what kind of why we got a bottom here in the market around 740, 750 in the TF, the Russell 2000, a little bit of a trace back, but we're still pretty. We have a fair amount of fear in the market. At the level of 1 equity per call ratio, that's pretty indicative of a lot of fear. So the market could move higher based on that indication alone. Again, that's the soup that we look at, several indications on when we gauge the directional movement of the market, and ergo our official market bias. But right now, we're going to hold for neutral. And looking at the VIX, that printed an ET sell signal on a price technical chart, but that's actually a buy signal for the market, and then of course was right here. So this was a buy signal on the VIX, and we had a close at 44 in the market. We're now at 67. So that's a nice 25. That's a nice 25-point gain in the TF right there. So not too bad on a buy signal. But again, we're right back here at this midline, and if you can see, anytime you're at the midline, it's definitely when you get down to the midline, it's definitely usually a buy signal. I'm sorry, a sell signal for the market, because it looked a little grayed out. Because when you get a support, anytime you get support for the VIX, it's going to go higher, which means the market's going to go lower. So really a lot of mixed indications. Again, we kind of expect a trader's market. Looking at the MRSEM right while we're here, beautiful short position. We've given back a little bit, went short at 55.10. We did get down quite nicely to a low of 120, 901.20, over $5,000 per contract. At the height of its, and we're going to look at how this was a beautiful hedge for the SRD, but over over $5,000 in profit per contract. And then we go and get, again, we're systematic, generally speaking, but we did get a 2-bar reversal buy setup here at 924, so a great opportunity to take some exposure off the table on a discretionary basis at 924. So again, in a nice profitable trade. In fact, if we look over, we can pull this up and see what we have there. So beautiful. Green dot definitely would be part of the green dot portfolio that we're still contemplating. $100,000 over the last decade. Maximum drawdown $12,300, almost $500 expected every time you place a trade, and that of course is per contract. And as you can see, that's even after giving up not covering at 900, not covering at a 2-bar reversal, even not covering at a bullish tail reversal following a 2-bar reversal, which is why we've gotten this move higher. And you know, while we could, from a price technical perspective, expect more on the upside to around 945 in the EM, which would coincide with the TF getting a little bit more of a bounce to the upside before, again, we expect a rollover, but definitely, you know, pretty impressive. So we already looked at the sentiment picture and the daily perspective. We looked at the intraday dynamics, and we looked at the MRSCM. So now we're looking at the EVR3. There's just some of our platinum models. EVR3 TSR, not really trading, but again, definitely part of our green dot portfolio, I would imagine. Let's take a look at this. Green dot. So yeah, the green dot portfolio theory is going to be you definitely have to have recently had a green dot. Now, what's going to be recent? You know, this is September of 2011 right here. So recent obviously is going to be a relative term. Definitely, this would qualify as a green dot portfolio, given $500 every time you place a trade, maximum drawdown of just $4,000. So that's the EVR3 TSR. Here's the EVR3 AC TSR right here. So that was $40,000 on a $4,000 drawdown. That's $111,000 on an $8,000 drawdown. Only $250 every time you place a trade expected. We'll take a look at the equity curve there. Yeah, definitely a green dot portfolio candidate. Beautiful trade just the other day on the 21st. Beautiful trade, absolutely beautiful. 74, almost up to 64. That wouldn't be very good. So about 53 up to about 63, trading at 2 lots. Absolutely stellar trade for the EVR3 AC TSR. EVR3 filter, the filter's working. Hasn't traded. We'll take a look at that performance report and see again. Green dot right there. Yes, indeedy. $900 over the last decade every time you place a trade. Absolutely beautiful trading model. R60F, $70,000 versus a $4,400 maximum drawdown. About $150 expected every time you place a trade, and of course, a couple of beautiful trades over the last week or so. A very nice short position, followed by a pretty nice long, not too bad. And so we're going to look at the EMDS, see how that's done. Don't really trade the short side of this model over the last decade. It's not really worth the reward to risk. The risk is a bit high, but really when you put it in a portfolio, we should definitely look into putting it in a portfolio, see if it can minimize any kind of drawdown, particularly with the aforementioned ISRD, which was essentially long. Fortunately, the MRCM hedged this long, but the ISRD, sorry for the nomenclature, but would have been nice to have this short exposure as well for the move back, and then a cover there. And but again, not really nice to have this short position. So these are kind of rare to see these. That's why generally we only trade the long side on the EMDS. $90,000, $10,000 risk, $200 every time you seek to place a trade. Definitely a green dot candidate. EVR3 VSR, we'll see how you're doing. Green dot, looks like a little bit of a loss there. We'll take a look at that. $100,000, $5,000 drawdown, $300 every time you place a trade expected. Beautiful long right there, so I'm not sure why the little dip in the equity curve. Got a little bit of a dip there. Well, there's the bounce back there, so we had a few losses. MRSM PTL, that got a little bit of a loss there, so always take advantage. And as a matter of fact, we did just recently issue a so there's green dot R30C, R30B, green dot, R30A, green dot. Just closed out some 3 beautiful winners over the last week. And a tiny little loss. Tiny little loss. That's what we like to see. That's definitely what we like to see. What we don't like to see is this coming up. Bam! Actually, we're long 2 more in the EVMCM. Not looking too good. And especially after we just got whipped out 7 ticks off the low on a long at 763. Got whipped out 7 ticks off the low with our stop. Honor thy stop. So that cost about $2,000 or so by the getting whipped out. But it's a cost of doing business. You know, if it were easy and simple, everyone would do it, and you know, it wouldn't take a decade to reach the level that we've reached, essentially, which are, as you can see, absolutely incredible trading models. If you can see, and you know, certainly it's real time. Anyone can probably come up with something that looks like this if you use back testing. And if you use, you know, well, optimization, it's a, you know, in our line of work, it's a, you know, it's a trap that, you know, some particularly beginners just starting out in the first year or two trading, you know, you develop a system and you curve fit it. You fit it to the data that's been in the past that's traded, and you just, you know, obviously you can't do that. And you know, that's the key to our models, is never curve fitting any data, because we have no desire to look back and see, oh, this system would have traded nicely. We have absolutely no desire to do that. The development and the desire is to ensure that we're going to make money in the future, care almost nothing about the past, and that's why our models, particularly every week, we show you these models, and we show that these models are still making money over the long term. And so that's kind of got off track there, but you know, you have to you're going to have stops like this that are frustrating, and you know, get whipped out a little bit. So what else we're going to look at? Oh, we're going to look at, let's pull this up, and then we'll go look at well, let's see how CBR is doing. Kind of flat. There's the ISRD. Now this is beautiful. This is beautiful. We'll take a look at the percent. $100,000, 11,000 max drawdown. So this is a tier 2 model, actually, given a $12,000 drawdown, but it's a swing model. But you're going to look at this, and it's going to be painful. Oh, phew. Bought right there at 1380 and just closed this morning. The long exposure. Now we do expect, see all these winners, winner, 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 chicken dinner. As a matter of fact, I think we just mentioned that that this system was having a lot of winners recently, and of course that's just in time for a big loss. So here's the key component that we're always stressing to our clients, whether they're seeking to add exposure, or they've got a referral, or someone's been referred, or even someone's new coming in. We always recommend taking advantage. In fact, we just issued a buy signal on our portfolios a week or two ago. After the first quarter's results through, I guess, April 30 fiscal quarter. So February, March, and April. We had a pretty nice drawdown. MSA UDT, Delta DTS, about 100% drawdown. Those are the opportunities you definitely want to jump all over. Particularly, you just saw a 44% gain the other day in the Delta DTS 10K. So you definitely want to take advantage, particularly of this system. It's kind of what we're getting to. When you have a big loss like this, you're usually going to go into a phase. Let's see if we can find another big. There you go, right there. This happened last August, so it's kind of surprising to see it happen again. This was the complete breakdown of the market, but once you have that, it's winner, winner, chicken dinner. As you can see, winner, 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 winner. So this is a great time to get involved with, you know, just this system alone. Once you have this winner, now fortunately, you know, we have hedges, and we trade many models, particularly on the swing side, and you just saw the MRCM rode the short side all the way down here. So this was essentially hedged for us, but it tells you something about the system. It's a great time to get involved if you look back at the non-optimized, non-curve fitted history of the trading model. green dot, even though it's this little bitty blip that we just had. Looking at the EVR3, beautiful green dots. $78,000, $4,000 drawdown is the case. So that's looking at our trading models, and we've got a free informational day trade. We looked at the daily analytics. We talked about our official market timing. We looked at our Platinum Models update, and now we're going to go ahead and look over at this right here. The LTDTS, as mentioned, gains 44%. This is 10K version. Trades 9 lots, margin of $4,500. That leaves you room for a $5,500 drawdown. The maximum drawdown is probably $10,000, $12,000. Actually, it's $12,000. The average drawdown is probably about $4,000. So you're probably going to be okay with $5,500 in margin cushion. If you want to start with the most aggressive version, which is the 10K version, you're going to make 43% in a day. $4,400 what we made on, I believe it was Tuesday, the 21st. I'm sorry, that was Monday. What a beautiful Monday. So 44%. If you're interested in that portfolio, here's where we were informing our clients on our daily report. Definitely expect a move 1350 down to 1300. That was on May 15th. We also on the 16th issued a putting additional capital to work for your existing portfolio to all of our clients. We had seen a 50 well, I know we had seen probably a 30 or 40% drawdown in our MBO, so that's definitely a great time to get involved, and that's following the 100% drawdown that we had seen. I mean, it's just like on sale. It's like these portfolios that make money, consistent money over time. When they go on sale, you want to be buying them. It's just with any good stock even. So we had the unofficial scalp, reached our target of 1350 down to 1300. Then we made 43% on a bounce. Obviously the market was up. There's Evo EM active, putting up a nice $1,200 gain right there. And so that's kind of where we're at. If you go to the website, you can look at our most recent quarter for the PR100, 100K, 250K, 100K, MB100, and EVR3 50K portfolios. Or you can look into the looks like we're getting some buys going across there. Oh, that's more of the EVMCM. So you can go to the website, and those are the 3 models right there. And then you have the Delta DTS and MSCU DT. Those are both 10K or 15K portfolios. And you can click to subscribe. And you can take a look at the returns over the last quarter, live returns. Actually, I think these are updated, yeah, through the last quarter. And you can purchase the Delta DTS, for instance, $10,000 or $15,000 version, just $988 a quarter for 9 contracts. Now, of course, 9 models is usually about $100 a model a month. It's $900 a month, $2,700. The special list price is not $2,700 for 9 trading systems. It's $1,499. You can actually save another $500, so you're looking at $900. Basically, you're getting 2 months free, and you're getting those type of returns that we've seen. So, if you guys have any questions, go to the website, chat with support team live, or feel free to shoot us an email to admin@MiniAnalyst.com, and we will make every attempt to answer any question that you have. And I hope you guys enjoyed the video, and I hope you all have a great Memorial Day weekend, and we will see you next time.